and welcome to Business 300. My name is Philip Kulashov, and this is 300 Seconds About Business. We're all a busy people, so I have 5 minutes or less to get my point across. Although bookkeeping can take time, I promise not to take more than 5 minutes talking about it. Oskar Schindler, in Spielberg's movie portrayal, Schindler's List, said this: "My father was fond of saying you need 3 things in life: a good doctor, a forgiving priest, and a clever accountant. The first 2, I've never had much use for." Now, I do think doctors and priests are useful, but I definitely think there's something to his sentiment in valuing a good accountant. A lot of small business owners are specialists at what they do. Whether it's construction, fabrication, distribution, or anything else, the founder knows the product and the customer very well, but a lot of the time struggles to keep the numbers straight and the books sound. They maintain as much as they can and limp along with this constant cloud of accounting chaos over their heads. They run their business off their bank statements. Cost of goods, SG&A expenses, debt to equity, current ratio, what? These things seem uninteresting and overwhelming for the get-or-done owner, and that's because they are. But that doesn't mean they're not important. Like in most things, your lassitude will come back and get you. So I have 2 things to recommend that you, as a business manager, should do in terms of accounting. First, learn how to read basic financial statements. Read books about it, learn your stuff. There are 3 financial statements you need to know how to understand: the income statement, also known as the profit and loss statement, the balance sheet, and the cash flow statement. The income statement is a time-bound picture of how your business is doing. This statement refers to a specific range of time, for example, 2021 income statement or January income statement, and it divides in 3 basic categories: revenue or sales, expenses, what you paid for those sales, and profit, what's left over. It has subdivisions that are important to look at, like expenses related to making the goods and those related to running the business. The balance sheet is a rolling still image of the financial health of your business. As opposed to the income statement that tells you how your performance was given a specific time period, the balance sheet is a capture of your current financial health. And it also divides into 3 basic groupings: assets, how much you own; liabilities, how much you owe; and equity, how much you actually own after all debts are paid. And then there's the cash flow statement. Like the income statement, it's also a time-bound statement. It tells you what happened to your cash balance given a specific period of time. And it also divides into 3 basic groupings. On a side note, Trinitarian structures are obviously the best. There is strength and clarity in triangles. That's why the cash flow statement also has 3 groupings: cash from operating activities, what your operation brought in or took out; cash from investing activities, what your assets brought in or took out; and cash from financing activities, cash that moves to or from owners and creditors. So the first thing to do is learn how to read and analyze these 3 statements. It's important that you, as the business owner, understand how the numbers came to be and what they mean. If you can't read this language, you won't have the necessary insight to make the most informed decisions for your business. Remember, finance is all about insight. The second thing to do is hire a good bookkeeper or accountant instead of trying to save a penny by doing your own books. Maybe your business is small and you have 10 hours a week of bookkeeping. Okay, fine. Hire an accounting student part-time that will keep your books in order. Or maybe your business requires more rigorous accounting and your current bookkeeper isn't keeping up with the technical demand. In that case, hire a good accountant. When hiring a bookkeeper or accountant, business managers typically make 2 mistakes. The first is they wait too long to hire somebody to take care of the books. The second is that when they do hire somebody, the business owner is so exasperated by all of it that instead of delegating their work, they abdicate all the financials to the accountant. That's how business owners get defrauded by their own accountant or irritate them. Don't abdicate your responsibility over the financials. You need to have insight. But also, don't hesitate to hire technical help. You don't need to be keeping the journal in trial balance. You have customers to serve. So, as the business manager, know how to read financials and get a good accountant.